We've got the Bitcoin reserve risk, and this looks like it has just dropped off a cliff since the beginning of 2021, and is now pretty much in this green area. What does this measure, and kind of what does this tell you for Bitcoin reserve risk?
Yeah, so I mean, first off, I just want to say for anyone that missed it, your recent segment with Brent Johnson was fantastic. He's one of the best macro minds out there, and is just kind of dollar milkshake theory and just thesis and understanding of how the global economy works is almost second to none. So check that out if you missed that just right before me. In terms of Bitcoin, in terms of reserve risk, a lot of fun recently with the macro environment. Just pulled this up. Reserve risk is kind of one of the more advanced on-chain indicators, and it takes a lot of different variables that we have with this public blockchain data. But essentially, what it is it just takes price and overlays it with HODL bank. And essentially, what HODL bank is just the cumulative opportunity cost of hodlers. So every time the coins are hodled and don't move, you can kind of think of that as like a pent up opportunity cost. And so when you have price, the incentive to sell, up against what is the HODL bank, or the accumulative opportunity cost of all the hodlers, you get this really interesting oscillator that maps out the Bitcoin cycles quite well. So now what do we see is we're kind of in this green zone. For those that can't see, it's obviously a deep value zone. And it's just interesting to see kind of, the historical cycles mapped out with so much data just kind of packed into one metric.
Got it. And so when you then start to think about this type of metric, is it something that you can evaluate just on its own, or do you normally look at a lot of these metrics and say, hey, deep value is measured across metrics, and it's really important to kind of see, the almost confirmation across so many metrics? Or is it possible just to look, hey, look, I'm looking at this one thing and it's telling me something?
Yeah, so I mean, I really love to take a multifaceted approach with the analysis, which is why sometimes I come up here and only show on-chain data. Sometimes we talk about bond yields and currencies and the dollar index, like Brent Johnson likes to talk about. But with on-chain indicators, you can almost kind of compact all of the different variables into one, right? You can see, well, hodlers are spending, hodlers are hodling. Why? Well, it could be partly the macro environment. It could be partly because of a derivative margin call. It could be all these sorts of things. But net, right, we can see, there's 19 million Bitcoins out there, and these are moving, these aren't. And when a lot of Bitcoin are being hodled, which we're going to kind of cover a little bit later in the show, and price is really far down historically, and obviously past performance is not indicative of future results, but historically it's been a fantastic time to allocate to Bitcoin with size. So we're in one of those moments. And again, nobody wants to buy blood, and everybody talks about wanting to buy blood until it actually comes in 55% from the highs, whatever it may be. It looks like one of those times.
Got it. When we start to look at things like the percent supply of Bitcoin that's in profit, you've got the 7-day moving average here, again, falling off a cliff since the start of 2022. What is this telling you?
Yeah, so I mean, obviously you have a lot of people saying unprecedented macro environment. We're already in an S&P 500 bear market, only have 2 rate hikes. We're spiraling towards a big recession. How will Bitcoin do? The reality is that Bitcoin in its own volatile monetization phase, it's kind of had these huge boom and busts beforehand. So really, even though it's multiple orders of magnitude larger this cycle, in the realm of Bitcoin itself, it's nothing out of the ordinary, right? If you want to look back into the early days, there was really only one global exchange, Mt. Gox, and it collapsed, and the price of Bitcoin collapsed with it. And what happened? It recovered just fine, right? And a huge percent of the circulating supply was underwater from a dollar cost basis standpoint. But what happened? It recovered. Weak hands transferred to strong, and the resiliency of the Bitcoin network just continued to chug on block by block. So I love looking at this data because we can kind of see like, hey, 50%, 60% of the supply is underwater, right? And oftentimes when you get to these levels, you see the top buyers capitulate further, right? Which further drives down the price. So we're kind of, we're seeing a huge transfer of weak to strong hands. And we can see that with the data with just so many people underwater.
Yeah, it is incredible to see something that is a public narrative expressed in the data. I think that's one of the beauties of Bitcoin. We have the Bitcoin net realized profit loss. Again, I think just showing exactly what you're talking about here with more and more people being in this kind of loss position. What is this telling you, if anything different?
Yeah, so I forgot to label it, but it's a 30-day moving average here, so it smooths it out a little bit. And also you have on one side a linear scale of the net realized profit and loss, and a logarithmic scale. And I like to use the log scale of the Bitcoin price just to kind of to map it out, it's a little easier to kind of see the cycle by cycle moves. But essentially, this net realized profit loss, what we can see is when a coin is acquired, and obviously we can see when that coin was moved and the difference in those prices. So when the price is going parabolic, you see a ton of realized profit. I acquire a coin for $1,000, I move it at $10,000. I have a $9,000 realized profit. Maybe I didn't actually sell the coin, but just in terms of on-chain analytics, we like to call that a realized profit. And so what we're seeing over the past month is essentially the biggest capitulation or the biggest series of realized losses in absolute terms we've ever seen. So, nothing short of historic here. And obviously, I mean, it makes sense given that Bitcoin, previously $1 trillion asset, was bigger than it's ever been. But just goes to show you just the size of this move, the magnitude of it, and just how much the market's absorbing at these prices.
Yeah, it's just literally staggering when you see this. Another statistic that I spend a lot of time looking at, and I'm actually surprised we're not hearing more people talk about it right now, is the percent of the circulating supply that has not moved in the last 12 months. We crossed over 12 million Bitcoin that hasn't moved in the last 12 months, and this only continues to go up and to the right as a number. What do you make of this, given kind of all of the other volatility in the market, that still such a high percentage hasn't moved?
Yeah, so I mean, in terms of the on-chain analytic, the HODL metrics, this is probably one of the most simple, which is honestly why I like it the best, or not the best, but it's one of my favorites. It's just so easy to kind of digest. And so this is showing in absolute terms the amount of Bitcoin that haven't moved in a year. It's at 12 million, I think 470,000 Bitcoin, around 66% of the circulating supply. This just goes to show you, right? Bitcoin's 55% off the highs, unprecedented macro environment. People are worrying about a recession and what's happening. The Bitcoin hodlers, I mean, you can hear it, you can see it on Twitter, you can see the sentiment of the hodlers that are just relentless and they have unwavering conviction. I'd like to think of maybe us too in that cohort, right? They're not moving their coins, and then in fact they're buying more. And so if you think about just strip all of the data, everything else, all the narratives away, you have an absolutely scarce asset. On the other side of it, you have more and more going into the hands of people that are unwavering in their conviction and not going to sell onto the market. In the end, only one thing happens. And so we're kind of living through this, and obviously the market's consolidating, but this is why Bitcoin always resolves to the upside following these periods.